Okay, so we're back, and I'm delighted to introduce two gentlemen here, Mr. John Walsh and Mr. Izhar Arieli, for a fireside chat. When de-risking creates additional risk, what a paradigm! So, Ariel, please introduce yourself and the fireside chat, and explain to us why correspondent banking is such an important part of the fintech industry.
Of course. So, hi everybody, and thank you for joining us. Thank you for that. My name is Izhar Arieli. I'm the CEO of a company called Tenurex. What we're doing in Tenurex is creating a platform that connects between financial institutions and gives them the ability to work between one another and do business regarding payments and corresponding banking. When we're looking at corresponding banking these days, this is one of the only options we can find that banks and financial institutions in general can create more revenues and generate more revenues. And when we look at that aspect, we understand that today there are more de-risking than more relationships in that part. And therefore, when we look at that aspect, we understand again that this is what creating more risk today for financial institutions. And John, of course, will elaborate much more about this. So let me welcome my friend, Mr. John Walsh, to present himself and take the lead.
Thank you, Zah. It's a pleasure to be here, and it's a pleasure to join all of my friends in Israel and around the world. We're going to be speaking about several different things, but we call it correspondent banking, but really in a way it's cross-border payments. So, a lot of terms over the last decade has changed. So a lot of the old-time people and a lot of the old-time businesses and the banks and the big firms of the past are looking at correspondent banking as as a business, and it's a big rock business. They think very heavy, very technically heavy, human being heavy. But if you look at the world we live in now and across payments and moving money rapidly around the world, I mean, it's really coming together, payments and correspondent banking and fintechs. So the words are evolving. So one of the things that we're working on, and Tenurex, SightSpan have been partnering on, coming up with really ideas and an ideology to make cross-border payments more democratic, make them more cost efficient, make them more effective overall. So we're doing a lot of work and dealing with things on a global basis rather than inter-country. So we don't really look at it this country, that country. We look at it on a global basis. And how do you move money cross-border on a regular basis in a cost-effective manner?
That's wonderful. And John, for everybody, if you can present yourself, what you're doing, and a bit about SightSpan, I think this is crucial. But after that, if you can elaborate a bit more about what's going on today in the U.S. market, and tell us a bit more about the market itself and what's going on there, because I think that most of the people, at least in Israel and also in Europe, do not understand yet what's going on that market. So.
Well, you have several things going on, but first let me tell you a little bit, and I'm never going to pass the opportunity to talk about SightSpan on myself. So, SightSpan has been a firm. We deal with risk management around the globe. We've been established for 14 years now. We deal with anti-money laundering, counterterrorism financing. We deal with security risk and operational risk of all types. One of the things that we like to do at SightSpan is really protect the assets. So while people are growing and focused on, staffing, growing their business, expanding, one of the things that we do at SightSpan is assist firms around the world and making sure that they stay legal, making sure that they stay compliant. But also, when we look at things, we look at them from a risk-reward perspective. So this is possible. These are the risk controls that are in place. This is the cost of the risk controls, etc., so that business people can make rational decisions and do predictive analysis of profitability. Sometimes people want to go into a high-risk country or a high-risk product, and without looking at all the risk factors and the amount of time, energy, staffing, and money that is going to stay there to have it at a risk tolerable level. So we do all that analysis, and we become an extension of the firm. So we work with a lot of firms in Israel. We work with Payoneer since day one. We work with Mesh. We work with a lot of different people where where it's how do you grow rapidly, but do so in a controlled way. So that's what we do. It's like we let others make the money. Our job is to help people keep the money, and to keep bad guys out from using your organization. Now to the next point, as far as what's going on, we're in a dilemma in the United States and around the world. But you asked about the United States, so I'll speak a little bit more about that, and even in Europe and Israel. But we're in a situation where we haven't been in a long time. I've been in hyperinflation when I was in university, when interest rates are 20, 21%. Now we're in a situation where we have virtually negative interest rates. And if you look at Germany, and where it's actually they're paying, you have to pay money to leave the money in the bank. So the United States is flat, but if you look at Germany, you look at Japan, it actually costs money to leave it in the bank. So we have an issue. And if you look at all the results that came out of the U.S. banks last week in the quarterly reports, if you look at the numbers were all up. The banks made money, but if you dive down into the sheets and into the information, you're going to see that on the deposit side, on the lending side, it's catastrophic. And that's why a lot of the stocks, equities, even though the numbers were way higher, they still dropped, because when people started to analyze the sheets and look at really the projections going out into the future, we're going into a negative interest rates, possibly dip down before go up into a higher interest rates. So how do you survive in that area? You have to, do underwriting, and you have to do more traditional Wall Street business, but the banking business itself is going to be in turmoil for the foreseeable future. Everybody's putting higher interest rates. Who knows when that's going to happen, when you have the crowding out effect and you have multiple borrowers taking on the government. But on the other side, you have the government that's borrowing so much money that they want interest rates low. So you have the natural forces here are at a battle. In the interim, mid-sized banks and smaller banks and payments firms are in a jam. How do you make money? When you're a gigantic global organization, that's one thing. But if you're a tier 2, tier 3, whatever they happen, I don't know how to classify them. I don't want to say a small bank, because every bank in my book is a big bank. So, but if you look at the whole banking industry and you look at the thousands of banks, they need to make more money doing things that perhaps they didn't do in the past that can do now. And that's where it ties back into Tenurex and things that we've been doing, where correspondent banking or cross-border payments is an area that lots of people could get into now, but they're afraid to, because they're thinking of 10 years, 5 years ago, even 2 years ago, when it was not possible. Where now the technical tools are available, the intelligence is available, but more importantly, the marketplace is now available. Cross-border payments is growing rapidly around the world. And if anything else, no matter how much the devastation and the sadness and the discontent around the world with the virus and the pandemic, it has opened up cross-border payments like we've never expected. We have firms that grew at 5, 6, 10, 20, 30 times, not 20%, 30 times, 20 times with cross-border payments, because this is the new era. So we've sped up something that maybe was going to take 10 to 12 years, and we did it in 10 to 12 months. So now the key factor is, how do traditional banks and fintechs join forces, and the technology that powers the fintechs like Tenurex go into a traditional banking system and be able to open up the cross-border markets into larger people, not only to increase revenue, but to better service their clients, and to actually make a more democratic society across the board from a payments perspective.
And this is exactly where we found ourselves working together, because when we established Tenurex, our goal was to actually first, as you said, democratize corresponding banking, but also give corresponding banking as a service. And to the people that are watching us, our job as Tenurex is to do two main things. First, if you're an FI, a PSP, an EMI, deposit taking institution, it doesn't matter what kind of license you have. Our job is to help you find more partners. And the other side of what we're doing is enable these partners to take more transactions, but without the risk implied. And how we do that, what we're giving is a solution, a platform that first enable and create the understanding of how to with one another. What are the rule books, and what is the game that we're playing in here? and how we can start working together. So this is one. But the second thing is a process that's diverse, a process that gives each and one of the parties the ability to understand first who is accountable right now, where is the money, and the most important thing, everything is based on data. So first is data, then you take a decision, you give the other side the ability to take his decision, the same like you have in credit cards. When you have post and then approval on the other side, you have the oath and the capture of the transaction. This is exactly what we are giving our clients when they're using Tenurex. And when we met, me and you, John, we clicked, but more than that, we understood that your business, when you enable, of course, business, and you're safeguarding your clients, and our tools to give these schemes, to give the process, can connect very well together. So in your point of view, our relationship and our partnership can create what? Can create what kind of advantages?
Well, there's a lot to be said there. So if I just take a step back, I think it's important to mention when we first started together, and my background before I got into compliance and risk management was running brokerage firms and dealing with cross-border trade. So I traded it throughout the United States and in high-risk countries and emerging markets around the world. So one of the things that I needed to do was go establish a firm in multiple countries in order to be able to trade within country. I had to go in country, open up a company and trade. Where now, when I first saw Tenurex and I was working with Al and you and Nor and I was looking at it, I was like, wow, this is a dynamic trading system, because we could all look at things through our own lens and our own experiences. So, you know, Tenurex is a technical firm that enables people to do cross-border and card and banking. But when I saw it, I said, wow, this is a compliance system. This is a cross-border trading system. This is a routing system. This takes up an interbank broker system. It's all of those things. But, you know, like anything, how do you start and have expertise in certain areas, and then other people could utilize it? So what SightSpan does with Tenurex is Tenurex provides the backbone, it provides the technology, and it provides the network. And I think the key factor is as Tenurex grows and provides more and more people into the network, it's going to be more expansive, and it's going to open up cross-border trading for more people to participate in. Because all the compliance is taken care of, all the documents are properly stored, someone would be able to go in and more naturally see if this is something that they wanted to trade in by putting in their risk criteria. So what might take up to 6 to 7 months in a traditional large bank could be done in 5 days or less. And that's pretty dramatic. And right there, that time is going to speed up the process of onboarding, but it's also going to open up payments and cross-border payments to places that need the payments, that want to participate in the global community in a much faster way. And I think that's critical. So not only is it about making money and bringing and servicing clients, it's also about creating a global economy where people are able to move money quicker in and out of areas that need the money and want to be involved in the global community. And that's something that, you know, we as traders and we as business people don't always look at. We're always going, also a service here to a country that perhaps has a catastrophe and is not in the global community. Very quickly, that they would be able to be established trading and correspondent banking relationships with proper governance and with proper risk management perspective. But that the world could help each other while using this technology. So it really depends. So it depends on so many angles to look at Tenurex and cross-border payments. So the thing too is what we do is we're the operator. So it's like we're the operator. We use this tool and we use this methodology to assist clients in managing correspondent banking and cross-border payments. So if a bank's in the United States, in Minnesota or Idaho or anywhere around outside of Maine, New York, San Francisco, LA, wanted to get into this business, we would be the operator. We would run that department for them using Tenurex as a tool. And I know it's a cliche and we don't say it very often, but sometimes the best way to say it is correspondent banking in a box. It's kind of rapid way to get into a new business. And I think that a lot of banks right now and a lot of the traditional financial services firms, if they don't expand into new businesses rapidly and cost effective and with a proper management perspective, if they don't do that, the chances of them making money over the next 24 to 36 months is nil. So people have to be very nimble right now. They have to make executable decisions and be able to execute on that decision within a matter of months, not a matter of years. Time is no longer the friend of financial services.
And this is exactly where we think that we need to to create the more value with the smaller financial institutions. When we see a financial institution, a bank, mid-sized bank that as you said, doing his retail thing in Idaho, and until now we use the corresponding bank of a corresponding bank to give services, and this is where we want to add the value. And this is actually when we chose corresponding banking, the new revenue generator, to say that this is not and sorry for saying that, for the city people and the BNY people and the BNP people and so on and so forth, but this is not a solution for BNY and BNP and Citibank. This is a solution for the small regional. This is a solution for financial institutions that really want to create more revenues. And they're afraid. They're afraid of the risk. And this is where we're coming in, and we're decreasing that. We're taking the risk out of the equation. And we're talking about the operational risk, the compliance risk. We're talking about the liquidity risk, and of course the reputational and the KYC and AML risk. All of them combined are now, you can choose, you can look, you can control, and you can manage. And when you manage the risk with this tool, actually you can create much more revenues without the risk implied. So de-risking creates more risk when you do not use that. And this is the understanding what we can bring to the table together, I think.
Absolutely, and you mentioned on the word de-risking, and that's a tough word to deal with, right? Because what is de-risking? There's political de-risking, and that happens on a regular basis, and that creates avenues all the time for adversaries to move into an area. So sometimes there's political de-risking, and all of a sudden there's a country, and oh, you can't do business with that country. Well, other people need to rapidly get in there because the country's going to survive. They're going to find other avenues. But by using this sort of mental approach of balancing correspondent and cross-border payments with risk controls, people would be able to adjust to any de-risking or encouragement to trade in areas more rapidly. And you could change your criteria using proper tools like Tenurex. You'll be able to change your criteria to attract and be able to do predictive analysis of bringing on board and how many people would you be able to bring on board from a particular country. And that sort of analysis is something that used to be done in the analytical department, not in a given tool, and certainly not within the correspondent banking. So that sort of behavior and that sort of intelligence is really necessary to say, if we did move into this country, how many would we be able to onboard in a very rapid fashion using Tenurex? And that information would be there, would be readily available, which normally in the past has not been. So really, correspondent banking needs to pick up with and join. So it's a merger of fintech, cross-border trading, and correspondent banking. I mean, those three things are merging. Tenurex is helping that come together.
Thank you very much, Izhar. Thank you, John. It's actually refreshing to hear that Tenurex, you're focusing on the smaller banks, so not many are focusing on these realms, and they're actually looking for a lot of solutions, and most of the fintechs are saying, okay, these are too small for me to even engage, not to mention a completely different value proposition. But thank you for elaborating what do you mean by de-risking, and it was very insightful. So again, thank you for sharing with us everything. We'll move now to our next session with the New York Stock Exchange, focusing on investment. So thank you very much.
Thank you, John, and SightSpan.